Don't know how, I don't know why. Okay, so York region, up 0.5% year over year, right? Like, I mean, that's that has Newmarket, that has Vaughan and Richmond Hill in there. So it's a pretty big area. Ooh. Hey everyone, welcome back to the Mark Loeffler Experience. Today, we're going to talk about Canadian real estate. I know, big surprise. So we're going to talk about what's happening in the Canadian real estate market. Is it going up? Is it going down? What are the trends? What are we likely to see happening in the future? So some of the highlights that we've obviously seen in May. So national home sales climbed 5.1% month over month in May. Over the year in 2022, sales are up 1.4%. The number of newly listed properties is up 6.8% month over month, still at historic lows for how many properties are listed at this time. We are seeing a lot more inventory flooding the market right now. The MLS Home Price Index did climb 2.1% month over month, but is still down 8.6% year over year. That is not the average sale prices, which we'll see when we look at the national housing map, what housing prices are doing in various areas. And as you can see, the actual not seasonally adjusted national average sale price posted a 3.2% year over year price increase from last May. So that means that if you bought your house last May, prices are up 3.2%. Obviously, I think the low was going to be in January. We called that. We told you, hey, probably the low right now. It's feeling like that in the market. Last June is when it kind of just started, that was biggest drop. We're getting back to those June levels right now. We're at those June levels. If you bought a house in June, I'm going to tell you, you're probably just going to be get any much price appreciation from the market, yet you haven't lost money either. Not like if you bought in, say, early March of 2022. So as you can see, that again is up 3.2%. So in May 2022, it was $706,700, and now it's $729,000. And of course, this is the national average. So we usually go from west to east coast. Today, we're going to go from east coast to west coast. We're going to throw everything out the window here. Try something new. All right, let's see what's going on in St. John. St. John's, Newfoundland, even, is up 3.5% year over year. And there's probably a reason why we go west to east, because the west is usually at the top. Again, Prince Edward Island up 3.3%. And those guys haven't seen that big a drop out there. And of course, their average sale price is still $350,000. So it's funny, when we had Taco on, Mark Taco, we're talking about living in cheaper places that, are still relatively nice. Prince Edward Island, I heard, is pretty nice, and you can still get your average price for $350,000. Might be worth looking into. And so Halifax is down still 1.8% year over year. St. John, New Brunswick this time, down 5.2%. We'll check out the Greater Moncton area, down 4.5%. Good old Quebec. Let's see what's going on in Montreal there, down 6%. So again, I just want to look behind the scenes at these numbers. 3.2% change nationally, and we all know that each are individual markets, but some of the smaller markets that we've seen are up, yes. But the bigger markets down 6%, right? I don't know, maybe Toronto is but I've always felt that these numbers were skewed in some way. Don't know how, I don't know why. Okay, so York region, up 0.5% year over year, right? That has Newmarket, that has Vaughan and Richmond Hill in there. So it's a pretty big area. Ooh, Woodstock, Ingersoll, down 16.5%. And that just shows you that maybe all those people who moved out there during the pandemic because it was cheaper, they might not be living there anymore. These are Essex, down 17% year over year still. These are some big numbers. Greater Toronto area, that's down 7%. And you have the biggest market in Canada still down 7% year over year. I'm just wondering, how are we up 3.2%? I don't know. The math just doesn't make sense to me. I really do want to look behind the scenes on this one. Sudbury down 5%. I would expect that we're still down 4% year over year. But again, that's not what the national map is telling us. Check out Sarnia for our friends out there. 2.6, down 2.6. Quinte, Belleville area down 12%. Some of these areas are that represent a good opportunity to go in there and maybe pick something up. Peterborough, 17.5% down year over year. I like Peterborough and the Kawarthas, and I think that cottage properties are getting cheaper, not more expensive right now. Ottawa down 9%. Oakville, Milton area down 2.6%. Oakville did have a huge run up in pricing in the last couple weeks. They were seeing bidding wars on lots of stuff. That's kind of calmed down because more inventory is coming on the market. And we know, at least if you watch this channel, you know that there's supply and demand. When supply goes up and demand stays the same, prices don't go up as quick, or they go down. When supply is down and demand is up, prices go up. All right, let's check out Niagara region, down 15.6%. So that we have one coming up in the Niagara region, and I'm like, I don't know if this is going to work for you guys, the pricing. London down 12%, just under 12% right now year over year. Let's check out the good old Mississauga area, down 8%. These are big markets that should swing the pricing. Kingston down 9.7%. Let's check out Hamilton here, down 10.7%. I just don't understand the numbers. Somebody explain to me these numbers, please. The Durham region. See, Durham, okay, now it's only down 0.4%, but still, it's below the year-over-year change nationally. Cambridge, down 5.5%. Check out our good old Brantford, down 11%. Barrie, down 13% year-over-year. Maybe out west is like just pulling stellar numbers and it's just dragging up the middle of the country. Well, Winnipeg isn't. They're down 5.5%. Saskatoon, maybe. Oh, I mean, they're up 0.1%. They're not down, but I don't see where 3.2% comes in. I know I'm not looking at everything, but I'm looking at most of the major markets here. Regina, down 4.6%. It's not making a lot of sense in my head right now. Oh, here you go. Medicine Hat's up 4.9%. They're pulling up the average. Good old Medicine Hat, Alberta. Let's check out Grand Prairie. They're down 3%, so down the average. Edmonton, 8.4% negative. I mean, that's where I'm buying all my stuff, and I know that my multis are up since I bought a couple years ago. Calgary up 2.6%, but not many are over the national average. Nope, not Victoria, down 9.4%. Greater Vancouver down negative 5.5%. I want to see the math on it. It's not making sense that we're up 3.2% year over year. But hey, again, what do I know? I'm just a guy on YouTube. Trying to go through the numbers for everyone just to give you a better picture and to tell you that real estate is local, not national. So when you hear the national numbers, drill down in your local area because some are going to be up, some are going to be down, and that's just how it's going to work for the next little bit. We're not going to see that huge. We're not going to get interest rates so low that it's going to drive all the real estate in Canada. That's just not going to happen. They're going to do the opposite. And the opposite is they're going to try to drag down real estate in most areas. I think it's going to be buoyant in some areas because it's just more affordable, so the interest rates don't hurt as much. But some of these less affordable areas, it's definitely going to hurt everyone. All right, guys. Well, hopefully you enjoyed this quick market update on the Canadian real estate market. Hope you're enjoying your day. Thanks everyone for watching. Hope to see you all at our investor meetup tonight. This is our last one for the summer. We will continue in September. If you do want to get on any of our email list, DM me on Instagram. I'll put you on our investor meetup list and any of our private deal lists as well. Catch you next time.